Forward: Jensen Huang's prophecy and Claude's fingertips. March 2026 has brought two seismic shifts to the tech world. NVIDIA's Jensen Huang declared that AGI, artificial general intelligence, has been functionally achieved. Meanwhile, Anthropic released its latest model update. A quick side note: in yesterday's Intuit analysis, I misquoted the Claude model version. The latest version capable of autonomous computer operation is Claude 4.6. Personally, I'm not a huge fan of Claude, or ChatGPT for that matter, primarily because they speak with an irritating level of overconfidence. However, Claude 4.6 is no longer just a chatbot behind a screen. It has gained computer use capabilities, moving the cursor like a human, navigating complex financial software, and independently performing cross-platform settlement reconciliations. For Broadridge Financial Solutions, BR, a company with a $19 billion market cap, this sounds like the tolling of a death knell. Part 1. Unmasking Broadridge, the boring but deadly king of back office. Before discussing the impact, we need to look at what Broadridge actually does. They operate in the most boring, yet indispensable corners of finance: proxy voting. If you own shares in a public company, the odds are that BR is the one distributing your voting materials, tallying the results, and reporting to regulators. It is the sole neural center between global corporations and hundreds of millions of investors. Clearance and settlement. They handle the back-office processing for trillions of dollars in stock and bond trades daily. When Goldman Sachs and JP Morgan execute a trade, the underlying ledger reconciliation often runs on BR's rails. Regulatory communications. Think account statements, prospectuses, and regulatory reports. This isn't just sending mail, it's a high-stakes compliance notification involving legal liability. The core conflict: this business is essentially high-frequency, low-tolerance, heavily regulated process handling. Current AGI acts like an omnipotent digital octopus with tentacles reaching into every interface of these systems. If banks could replace BR's services with AI, that $19 billion market cap would indeed look precarious. However, there is a fatal paradox. The more powerful AI becomes, the more expensive its confident lies, hallucinations become. As mentioned in my side note, this overconfidence is AI's Achilles' heel. The financial industry has an extreme germophobia regarding data. A single misplaced decimal point can vaporize hundreds of millions of dollars. Part 2. Who pays for the ghost? This is where Broadridge's moat lies: liability. AI is a ghost. Even if Claude 4.6 makes an operational error that triggers a trading disaster, Anthropic will likely just send an apology letter. Their API terms are riddled with disclaimers. You cannot sue a line of code, and you cannot send a model to prison. BR is the bodyguard. Broadridge doesn't just own code, it owns SEC-regulated licenses, legal contracts, and the capital to pay for damages. The analogy? AGI is a Ferrari with an unbeatable engine, but Broadridge is the indispensable seatbelt. The faster the engine runs, the less anyone dares to hit the gas without that belt. Part 3. The 3-year cycle. Probabilistic paths for the future. At this $19 billion crossroads, we can use probabilistic thinking to map BR's future. The AI tamer: probability, 50%, upside, plus 80%. BR successfully transforms into an AI reform school. They internalize models like Claude within their compliance framework, using AI for data processing while using humans for final hallucination checks. Operating costs plummet and margins soar. The digital plumber: probability, 35% to range, plus or minus 10%. BR becomes the utility company. Despite the AI explosion, banks stick to the old pipes they trust. To retain clients, BR is forced to slash prices. The company remains stable but becomes a purely defensive asset. The dimensional strike: probability, 15%, downside, minus 50%. Regulators suddenly declare code is law and launch official open-source audit agents. In this moment, the intermediary vanishes and the moat collapses. Conclusion. Final thoughts. A final reflection. Compared to Duolingo, which I researched a few days ago, Broadridge's risk-reward profile feels somewhat mediocre. Like yesterday's Intuit analysis, BR's core value is accountability for data. The scariest thing about AI is that 1% error rate. When it fails, the consequences are catastrophic. Therefore, the ability to audit AI hallucinations might just be the most important corporate moat of the future.